All right, with that in mind, folks, let's jump over to our man Tim Ord. We talk to Tim every Tuesday and Thursday. If you want to reach Tim, folks, you can reach him at his outstanding website, ord-oracle.com. And man, we got a day today. Tim Ord, good afternoon.
Good. Okay. Can you see my charts, or do you got them?
You know, we both got him. Our producer, I believe he's going to get him up there. I'm trusting him, but I have him as well, Tim. So let's go for it because, boy, we got quite a day in these markets, man. What are we looking at, Tim?
All right. We'll do chart number one. If I'm doing it, I can underline the stuff I want to point at.
Why don't you go like you're doing it? I think my producer would tell me, but I think he's all set. And if not, we'll make it happen. But go for it, please.
All right. So anyhow, we had support. The first chart is the daily SPY. We had support around 575, which is where a gap lies and where the previous highs lies. And I have drawn a dark red line across that area coming in right around that 575 on the SPY. We hit there Friday, and we bounced off today. Another thing, we were up 6 days in a row going into last Monday. That predicts the market will be higher within 5 days, which actually today would be the 5th day, and pretty much on track. It didn't. Normally you're up more than this, but anyhow, it pretty much did work 6 up days in a row to predict the market will be higher within 5 days. That pretty much was on target. Probably tomorrow the rally will continue, but we did find support where we're supposed to find support, which is the previous highs and where the gap was. And then from there, the market at least made base, if not rally. Looks like we're rallying. Volume's probably going to increase today. So anyhow, we're probably going to keep going here. So let's flip to chart number 3.
Okay, we're on 3.
And we're on 3. This is the weekly chart. If you notice, back in March, we broke below the 575 area. And we went down to an April low. I think April 7th was the low. And we rallied back. We broke above those previous lows of 575 on a couple of weeks ago. And so if the market can't hold below the previous lows, it'll try to take out the previous highs. Well, the previous high is at 610. And that's probably where we're going to go over the next, a couple of weeks. It's hard to say. This thing, it doesn't really give time sequences. But in general, this market's probably going to rally. A lot of times around the July 4th time frames, there's usually highs or lows. And most likely, we got July 4th is not, it's a month away, a little over a month away. I think we'll probably just wiggle up all the way to that 610 area around the July 4th time frame. That 610, if you notice, we had quite a bit of time-wise up there. We had the whole of December, whole of January up in that region. So he basically had 2 months of staying up around, or anyhow, got 2 months of hitting highs around 610. And to get through that, you're going to need really a sign of strength. And normally, the summers don't really produce the signs of strength. The falls do. So I'm not real bearish, but I think we'll probably get up to that 610 area. And at some point, say after July 4th high, we may fall back down to 575 again. And this whole thing may create a right shoulder of a head and shoulders bottom. That's what I think the pattern is going to be. But between now and probably July 4th, we're going to hit the 610, and that 610 is going to be resistance. So not a huge resistance. The first time up, you're probably going to hit it and fall back down, and 575 is probably going to be support.
Great details, man. I love the clarity.
Music.
Yeah, I love the clarity that you give it, man. No qualms about it. We know where you feel, man. It's perfect. Can you hang with us? We'll finish. We'll go through some more of these charts.
I got more charts
here. Okay, perfect. We're coming back with Tim, folks. We're talking markets. We got markets in the green. Stay tuned. Don't go away. Welcome back, folks. We got the S&Ps up by 1.95% right now. We're talking with our man Tim Ord, and we're talking some markets. And let's keep going, Tim. And I know they do have your charts. I was following along well in that first one, but they got your charts up there now. So if you could go for it, that'd be great.
All right. So anyhow, so this is where we're probably going to go. We're going to go with 610. I don't think the first time up we're going to get through it because you got 2 months of resistance up there. So that first time we're probably not going to make it. Probably going to fall back down to the 7.5 575. Then probably September low probably. Then from there up. If you do the measurements, this potential right shoulder. And you take the bottom of the head and go up to the neckline, which is around 610. This head and shoulders pattern has an upside target of about 740, which is about 21% above 610. So this year, I think we're actually going to do pretty good. It depends how this head and shoulders deforms, but the bottom in, I don't think we're going to go back down to the April 7th low. We're going to find, worst case scenario, is going to find support in this 570 area. But now we started a rally, and that 610 first time up is probably going to be resistance. Will we get there around the July 4th time frame? Possibly. Since this is a summer, usually summers don't have continuation patterns. That usually comes in the fall. So I'm thinking we rally up to 610, fall back maybe in September to September low, back down to 575. Then end of the year, we take a run at the highs again up to 610. And I think we'll probably break through. So that's my thing. Internals will look fine if you go back to chart 2, which is this one. The bottom window is the NYSE advanced decline with the 4-day average. Anything that gets above 4, which in other words 4 times is more advanced issues and declining issues on a 4-day average, is a huge sign of strength. And I marked the times in the past going back to 2019 or whatever, and all of them came at lows. This one here back in the 2020, it created a base, it built a base for a couple of months before it went. I think this one's just a spike bottom straight up, but we are going to find resistance 610. So I'm thinking this sign of strength. These are multi-month type indicators. They're not short term. They're multi-month. So I'm thinking we are going to break through 610, but it's going to be later in the year. So we'll have to see how that develops. But target for the near term is 610. Then from there, we may go back down again and get us scared in August, September, maybe October time frame. Then probably start to rally sometime in October or September, October to, in my opinion, new highs. So it looks pretty good for this year. We got the gold market. Let's take a look at that.
Yeah, let's do it.
This is the monthly chart. The bottom window is the monthly up-down volume. I keep showing this chart. This is just a reminder what the bigger is, and the bigger trend is bullish. This chart goes back to 2007, and what it is the cumulative up-down volume on a monthly time frame with the Bollinger Band. That's the bottom window. The next window up is a cumulative advanced decline on a monthly time frame, and basically when both those are trending up or above the upper Bollinger Band, there's an uptrend in GDX, which is the top window. That's shaded in green. And when it's a downtrend, in other words, below the Bollinger Band on both indicators, it's a downtrend. That's when it's pink. We've been in the blue or the light green since early last year. And we keep making higher highs in both those indicators. And not saying we can have short-term consolidations. We are. I think we're actually in one right now. But as long as those two indicators stay above the mid-Bollinger Band, the uptrend's intact. And most of these indicators last a minimum of a year and sometimes up to 4 years. So we're into about a year. I see no signs of this market quitting on an intermediate term scale, but it looks pretty good. So if you're long, it's fine, but on a short-term basis, we'll go to chart 5. This is what I'm thinking is developing. This is 3 drives to the top pattern. Brought this up before. Market's kind of been choppy since the April high went down, kind of came back up. It's pretty much close to where I sold my position at as far as GDX is concerned. I still own quite a bit of other stocks, but I think GDX is probably going to head down to 39 because the 3 drives to the top pattern. This pattern did everything out of the textbook it's supposed to do. So, and July 4th, I think, actually could be the low for this thing. But we ran into the gap. We kind of backed off today. This gap had really high volume. It did finally close it last week, and we're down a little bit today. But in general, I think we're going to move down into that 39 area, and this is chart number 6 is chart number 6 is the reason why I think we're going to move down. This is a monthly GDX, goes back to 2016, and there's two things on this chart. I always like to have two indicators confirm my idea of a buy or a sell. I prefer even more, but at least I got two. Normally two gives a higher percentage that whatever you're thinking is correct. But yet RSI is very seldom on a monthly time frame. On GDX gets above 70. And I marked this one didn't quite get 70. There's one back in 2016, but the one in 2019 did. The one in 2020 did. The one in the currently we're in right now, we got above 70. That usually takes the win out of the sales on a short-term basis. I got a Bollinger Band, monthly Bollinger Band on the monthly GDX. And normally if you get 80% above the upper Bollinger Band, which we did back in May, I sold. That's the reason why I picked around 70, because the Bollinger Bands are approximately 80% above the upper Bollinger Band, and that's where I stepped out at. And we're pretty much still there, but that's another reason the market gets extended if it gets too far above the upper Bollinger Band. And so I marked those times in the past with these lines. So that's, you got the RSI, and you also got the Bollinger Band, 80%. And so that kind of reconfirms that the monthly charts are extended. That implies that you're at least going to have a consolidation. Well, the maximum support is around 40 area, 39, 40 area, which is basically the previous highs with GDX. And that's strong support because you bust through that support area, and that support area, or that was a resistance area, finally broke through it, now becomes support. That trend line dated back to 2020, so that's about a 4-year trend line, 4 or 5 year trend line. So you're not going to fall back down through it. You're busted above it. That will become strong support, then that's probably where the next major rally starts in GDX. How high is high? I got some projections, but we'll talk about that later. But over the next month, I think we'll basically just get a pullback to around that 39, and from there, I think you want to load up again for the high tier stocks. But there's the lower tier stocks are starting to perform now too. All the monthly charts are starting to turn up. So anyhow, that's my view.
Hey, and Tim, we appreciate it so much, man. Great information. It's cool that these markets have gone so high so fast. A little consolidation, probably what they need when you talk gold or the markets, right? As you were saying it, I was like, that makes sense, man. These markets, we need a little breathing room at least. Tim, thank you so much. We appreciate it, man. We look forward to talking to you on Thursday.
All right, sounds good. Thank you.
Take care.